Hey, everybody. Welcome to the morning market briefing. It's Thursday, January 8th, 2026. Hope you're doing well out there. Thanks to everybody who has joined us on the YouTube channel. We got 10 viewers right now. Appreciate that. 44 subscribers. Please subscribe. Please give us the little thumbs up button. If you're watching on YouTube, I don't really know how the algorithm works, but I don't think that stuff hurts. And if you're listening on the podcast, we appreciate it. We're really trying to grow the audience here. It seems to have, I think everybody's gotten over the hangover effect of switching off of the Zoom. So subscribe, get your notifications turned on. That makes it easier to know when we're live, even though it's the same time every day. Share it with a friend. We'd appreciate that. And if you miss one, as always, it's available in podcast form, but you can also check it out on the actual Morning Market Briefing YouTube channel. So I don't know if we have any graphics today, but we got to get a little better at that, I think, guys, about throwing some stuff on the board.
We're learning. This is I would say if you haven't watched the YouTube yet, the presentation level has gone up quite a bit.
Yep.
Like the entertainment value, quality, it looks good. I'm very pleased with it. In a narcissistic way, I feel like being on YouTube and having graphics and stuff makes us more legit, even though we've been doing this for a long time and have been, huge following on Spotify and iTunes, but this is the next leg up. We know, like Netflix knows, that the future is video podcasts, and so here we are trying.
We got to get the boys on Netflix.
Yeah,
we
need a Netflix deal.
With the graphics. We have about 140 slide deck for macro outlook. So I really want one of the things that, you know how like the radio shows will say go to clip 6.
Yeah, pull up 4 for me.
Yeah. And I would love to say, hey, Hicks, slide 73, go.
Hicks is looking for a new job, meanwhile. He's getting out of here.
Yeah.
Yeah, it's been fun. Hicks, again, has done a great job setting it up. I mean, I don't want this to sound more self-deprecating than it is, but the boys look way more legit on YouTube than they are.
Yes.
We got the ticker scrolling.
I think we could always argue that we've never looked particularly legit at any point in our careers.
But now we do. So
Looks can be deceiving, though.
It's
a lot of people are saying.
It's pretty fun. So, again, thanks to everybody that's along for the journey. As always, if you have questions, you can email those to us, tmmb@narwhal.com. The initials for the morning market briefing @narwhal.com. Let's jump in. Economic picture. Ben, ISM Services, nice little acceleration in December. Bit of a contrast to what we got in the manufacturing side Monday.
I was thinking that we would have a little bit more positivity on the manufacturing number that we saw on Monday, but I think there was just kind of this moribund downbeat flavor of the month that was still kind of a hangover from the government shutdown and tariffs on the manufacturing side, but services were quicker to turn back on. And we definitely saw that in the month of December. Where we really saw strength was more stabilization on employment. Employment had really we've been seeing a few more layoffs, and we started to see some stabilization there. A lot of the layoffs have already taken place. Usually, for example, when you see a lot of these restructurings, the time of the layoff is already done.
Yep.
By the time that you actually see the announcement. So some of the respondents said we did a reduction in force of roughly 10% as a cost containment measure. We are now able to hire more qualified people as the labor market appears to be stabilizing. So I think that's the big picture from the employment side. Prices are continuing to disinflate, which doesn't mean prices are coming down and things are necessarily getting cheaper on the services side, but it does say that prices are going up at a slower rate, and which means prices going up at a slower rate is synonymous with inflation coming down. So that's good. Employment stabilization is good, and new orders, which had fallen back in November, stabilized as well and are beginning to improve. In fact, we had posted the best new orders index in quite some time. So overall, good number from the ISM Services Index. It should feed through to a positive GDP revision today from the Atlanta Fed, which has a nowcast on the GDP. We get that later today. So I think this is good, and it sets up well for Q1, which I think has a lot of tailwinds behind it regardless. And I think that the momentum heading into Q1 is there, as evidenced by this report.
So this is not in the notes, but I was just looking at the live data feed on Bloomberg. We did get October trade balance numbers, and crazy, I think. So the expectation was that we would have a $58.7 billion trade deficit for the month of October. It came in at $29.4 billion. So almost half.
So that's also going to help GDP.
Yeah, so that's huge for GDP. Yeah. And so exports up 2.6%, imports down 3.2% month over month.
It's
back to
working.
September. Yeah. So, and not only that, but they revised the September number down from a deficit of 52 billion to 48 billion. So that's a big swing towards the good guys.
The math of the net exports and how it feeds through GDP is a little bit wonky because you're doing the change and the change. So it's going to be negative. You're going to have a trade deficit, but it's actually going to boost your GDP number if the deficit becomes smaller. And coming into the year, our expectation was that it would be about a 30 basis point drag to overall GDP, which was a lot better than the prior year.
Yeah.
But I think it's actually going to be additive to GDP. So the tariffs are having an impact on that, as well as the federal deficit, which is coming down. The federal deficit on a year-to-date basis down $400 billion on a year-over-year basis. We're $400 billion less in the red.
I mean, we were talking about it earlier in this week when we were talking about the fraud stuff. They're now saying that the estimated fraud right now in California, as they're starting to pick through, hey, what in California looks like what's happening in Minneapolis, $250 billion they're expecting. So
That I'd take the over.
say we trim half of that. That's a lot of federal money that goes back into the not spent category, which would be really nice to see. So, I think there was a little bit of, hey, there might be some hyperbolic language when I said that it's potential to be $1 trillion in excess spending that's just complete fraud. I think we might actually be a little bit short on that. So I hope that they continue to push the ball forward on that.
Yeah, I'm for it. On the employment side, Ben, job openings lower in November. I don't think anybody's necessarily surprised by that. Seeing declining hiring, specifically in the services side with IT, healthcare, state and local government being the most impacted. Overall, employment, I feel like we've got a pretty good pulse on where this is. It's not great, but it's relatively stable, and the expectation remains that unemployment rate's going to continue to tick up.
Yeah, I mean, I think this just kind of shows we're getting data that's supportive of a Fed rate cut. Fed rate cut. And
Say that 10 times fast.
And there's not going to be a Fed rate cut in all likelihood this time around, because I think there's just a reluctance to do anything, and I think that the data that does come in is going to be discounted by a lot of the members of the Fed. So that's just kind of where we are at the moment. But the data was supportive of lower rates yesterday.
Yeah, expectation right now 11% on futures, and I think that, I mean, the data is murky, right? I mean, what do you do when GDP is printing a 4 handle and unemployment is cruising towards a 5 handle simultaneously? I mean, we've not been in this position in a long time. And I was listening to Brian Westbury was on a live podcast on X yesterday, and again, he's really the poster child for talking about M2 money supply, and he's like, listen, cutting rates is not going to do anything. I think he basically was saying there's a lot of focus on that, but the federal funds rate is not driving inflation. It's M2 money supply, and so what they need to be more focused on is how are we cutting spending, and if they're doing that and not printing new dollars, then inflation will come down. It's not going to get better. But we were at zero rates for the entire Bernanke and Yellen period, and we had almost no inflation. And so the idea that if they cut rates, suddenly inflation is going to tick up is not true. But also, cutting rates is not necessarily going to do anything to fix the labor problem either, because it's all deficit spending. We were spending enormous amounts of money, printing it, putting it out in the streets. Companies were using that to hire people, and we're not doing that anymore. And the cost of money is higher, and so they have to make decisions. And so I definitely lean more in that camp where what they need to be doing is focusing on how do we get mortgages down. I know I sound like a broken record. I've said it a million times. That's the most important thing right now.
And, I mean, we'll maybe circle back to that, but certainly something that seems top of mind for the administration at this time as well. I mean, they seem like they're trying to figure that out in all kinds of different ways. But let's jump to some company news. Constellation Brands up about 2%, reiterating all guidance. Some interesting commentary saying the consumers continue to show cautious spending. They did note the cumulative effects of inflation and overall economic uncertainty among factors contributing to some of the challenges. But they did highlight our favorite job category, the 4,000 plus calorie job space, Ben.
And our favorite consumer sentiment survey, the University of Michigan survey.
I mean, they've got it all here.
Yeah, I ended up just putting a lot of the press release into the notes this morning just because they hit a lot of the hot button issues. I think that Constellation Brands is just in a tough position right now. And they did reiterate guidance, and I think that was a welcome change because they had been lowering guidance for a period of time. We'll see if this 2% move sticks today. My view on Constellation Brands is that they're in a category, beer, that is having lower frequency. I think that people are just drinking less in general. I know. That's what the numbers say. And I think that they're in a specific category within that where they had been gaining outsized market share in kind of the Mexican beer, Hispanic beer category. And I think that that's becoming a little bit more crowded, and that's also the sector that's most challenged on the demand issue. So you have weaker demand, both on a broader category and in their category, and more supply, more competitiveness coming into that category. So it makes it really tough. On top of all of that, the USMCA is going to get renegotiated this year. It expires on July 1st. So you know that there's going to be a lot of machinations heading into that, which makes providing any guidance when their next quarter finishes, which will be the end of their fiscal year, makes it very, very challenging indeed. So I think Constellation has a lot more headwinds than tailwinds at the moment. Could they climb a wall of worry and the stock price go up? Yes, it's relatively cheap, but they do have a lot of things that they need to grapple with.
Meanwhile, Apple's credit card making the move to JP Morgan, rolling off of Goldman's book. Interesting here. I feel like people in general, do you guys have Apple cards?
No.
Julia does.
I think this is, for me, this is indicative of the theme that we've seen from Goldman really over the last 3 or 4 years in terms of just trying to get out of the everyday consumer business. That's my biggest takeaway.
What a round trip for David Solomon.
Yeah.
I mean, he went into this trying to build out the consumer bank.
Marcus
Totally failed, ended up losing lots of money, billions and billions of dollars, and is now basically giving this to JP Morgan. A lot of times when card deals change hands, you get a premium. Like Goldman should get money. It's a $20 billion in balances, which means that's $20 billion in receivables essentially that you have. And many times that Goldman would get paid a premium on that because there is a franchise value there. It's not just, you're not just buying the $20 billion, you also get the business. In this case, JP Morgan's paying $19 billion for it. So they're getting $20 billion in receivables and only having to pay $19 billion and getting the business for free. So it's a good deal from JP Morgan. But what's interesting is that a lot of other people, American Express walked away from it. I don't think Synchrony or Capital One could really afford it maybe so much, at least their balance sheets. But American Express didn't pursue it, I think, reading between the lines, because the credit quality on this portfolio was lower. And you think, well, Goldman, Apple, shouldn't that be a really high credit quality, kind of like a Costco card? That's not the case, because what a lot of people are using the Apple Card for is they'll get the Apple Card in order to pay and buy iPhones in installments. And the people who are trying to finance their iPhones and buying in installments tend to be people who are just not paying cash for their phones.
I mean, it seems like there would be a high overlap with the people who are using Klarna to buy Chipotle as well, where it's like, oh, Apple Pay, it's already on my phone. I'm going to put it on there. I can't afford it, but I'd like to have a burrito, and then bingo bongo, you've got horrible credit. I mean, the ease of access to it.
And
too.
tummy problems.
I mean, think about, like even if you want to get a low-level credit card, like a Capital One card, or Discover card, you've got to go online. You got to fill out paperwork. I mean, the Apple card is right there on your phone. And I imagine in order to get subscribers onto it, they weren't real discerning on the outset.
It was very easy.
And then suddenly now you've got a bunch of people who are not creditworthy, who are buying garbage using their phone, not thinking about it, because the transaction on Apple Pay is even more, I'd argue, thoughtless than running a credit card, versus using cash. And I think that that's probably a bad mix, which is how you end up paying 85 cents for something worth $1, quote unquote, because you're basically assuming that 15% of that money is not coming back to you. So, and 15 is a high level of default rate on credit cards.
That's a lot. That's a lot. The Trumpsters out making announcements on what the plan is with Venezuelan oil at a high level, looking at a price point on this oil of $50 a barrel. The U.S. is essentially getting into the brokerage business where they're going to exert some control over this. They're going to sell it off. Money will come into U.S.-controlled bank accounts and then be dispersed to Venezuela thereafter, simultaneously using this as a way to really decouple Russia and China from this region.
So basically, you're exactly right. The U.S. is going to take the oil, sell it on behalf of the Venezuelans.
Yeah, I appreciate that. It's a service.
And then at some point, distribute that. But what they wanted to avoid is selling oil to China or Russia, and they want to avoid money flowing back to the cartels. So those are the two things the U.S. is trying to avoid. In doing so, they kind of take control of these assets, and Venezuela has to rely on the benevolence of their neighbor to the north.
He also had a call yesterday with Gustavo Petro, the leader of Colombia. It sounds like it actually went pretty well. He said it was a great honor to speak with him. And he said that the president of Colombia called him to explain the situation of drugs and other disagreements that we have had. I appreciated his call and his tone and look forward to meeting with him in the near future. That's going to take place at some point in time as organized by Marco Rubio. It'll be at the White House.
Yeah, it sounds like we're not going to go into Colombia, which I think is good news. I would say one other thing on the oil is that $50 oil all of a sudden starts to raise some real questions about how much drilling we'll do in the United States. If I'm an oil driller in the United States, a lot of times the break even is in the 55 to 60 range. If we're going to 50, I do wonder,
Not real motivated.
Are we going to start moving? I mean, we're trying to bring jobs back to the U.S. Does having cheaper oil elsewhere mean jobs actually flow out of the U.S.? That's just something to consider because it could be an unintended consequence of lower prices.
Trump, we talked about housing a little bit earlier, alluded to it, but Trump really going after the institutional investors on single-family home. This is a lengthy truth post, but I think it is worth at least considering. But it said, for a very long time, buying and owning a home was considered the pinnacle of the American dream. It was the reward for working hard and doing the right thing. And now, because of the record high inflation caused by Joe Biden and the Democrats in Congress, the American dream is increasingly out of reach for far too many people, especially younger Americans. It is for that reason and much more that I am immediately taking steps to ban large institutional investors from buying more single-family homes, and I will be calling on Congress to codify it. People live in homes, not corporations. I will discuss this topic, including further housing and affordability proposals and more at my speech in Davos in 2 weeks. He's taking it seriously. I mean, we've said this time and time again. When Trump starts saying something and repeating it, that's when you really got to start listening. Yeah, I think he cares a lot about this challenge that's out there. I think he cares about the quintessential American dream of home ownership. I don't know how it's all going to play out, but I think he's going to try to figure something out. I think he needs Congress to do it.
I mean, this is what's interesting about this, and I don't know how many people would be aware of this, is this was a major tenet of RFK Jr.'s platform running as an independent Democrat prior to joining the Trump coalition. And it's not a traditionally conservative view. In fact, it's the opposite.
It's not.
This is a very much a traditional left-wing idea, which is that corporations are not people and they should not be able to buy homes. I mean, that's a true blue Democrat thing. And it's an interesting, it's interesting because I think there are a lot of people who feel this way, regardless of political spectrum, which is that, companies like Blackstone came into places like Atlanta and Houston and Dallas and San Diego during the Great Recession and bought whole neighborhoods out of default for pennies on the dollar, turned around and have been renting them for years. And say, back then you could probably buy a house for $100,000 that was in default, and now you're renting it out at $2,000 to $3,000 a month every month, and your yields on that are insane. And that continues to be something that happens. You see a distressed area, you see Blackstone go in, buy a bunch of houses, and rent them out. And we saw it during the pandemic. We saw a lot of areas really get bought up. So I am sympathetic to this point. I don't know what the nuance is. How big of a corporation do you have to be to not be able to buy a home? Like, say you're somebody who,
can I own 3 rental homes?
Yeah, can you have a bunch of rental homes? Can you be somebody? Can you, like, where does it happen? Where does that line go? And I think that's the tough part about it, because like on one hand, it's not the most moralistic or beneficial thing to have companies doing this. I would 100% agree with that. On the other hand, there are business opportunities for the average person that can be made in that same type of investing.
Yep. Where
do we draw the line? And so I think it's murky. I think that it would be beneficial to housing prices, which we talked about ad nauseum. I don't know really where my opinions land on this.
I think you're spot on the political assessment of it all, Tom, because this has been a highly reported on subject, specifically in Metro Atlanta. The Atlanta Journal-Constitution has done, when I say great reporting, I don't mean like I like the data, but it is pretty thorough. And this has been something that has been pushed aggressively by my least favorite Senator John Ossoff here in Atlanta, who I think is a total loser. But, going back into last year in May, June, July, the AJC was running story after story on this, and Ossoff's whole point is that, hey, in Atlanta, 30% of single-family rental homes are owned by these big corporations. Again, do I know exactly where they're drawing the line? I don't. But that's 10 times the national average. And so when we talk specifically about the Atlanta housing market, if you've got a player in the space, whether you view them as bad or not, kind of doesn't matter. But if you have an entrant in the market that is doing 10 times what they're doing in other geographic areas, it is going to make homes less affordable. I'm not saying the people that own these corporations are wicked, that they're evil, that they're predatory, but it has an impact. Kind of like you, Tom. I don't totally know where I land on this stuff. But I think the fact remains that perhaps the biggest takeaway is that housing affordability is certainly at the top of the Trump platform at this point in time.
Yeah, my view, I think, is a little bit further to the right of you guys on this personally, just because I think there are unintended consequences of corporations not being able to do this. Just in terms of, hey, what can a legal entity do? Things like that. What can Congress really regulate this? I know on a hyper local level, you can have HOAs and put covenants. For example, like in my neighborhood, I think we can. I live in a townhome. There's about 80 units there. We can rent out a maximum of 5 of the units, and so things like that you can do on a hyper local. On a federal level, I think this is a challenge to get through. I do think the other consequence could be, a lot of times these companies come in and buy like the last 10 homes in a large neighborhood, or the last 15 homes in a large neighborhood, and basically close out that property for the home builder, which helps the home builder then go on to the next thing. That being said, I do hear what you guys are saying, and I do think that at the margin it certainly makes homes more expensive, especially because a lot of the homes that they're buying are at that lower kind of price point, that entry-level home, and it's doing is it's taking those entry-level homes off the market and instead making them rentals.
Yeah. And it doesn't help that Invitation Homes, which is the spin-off from Blackstone that houses all those houses, has been fined a ton of times for unfair trade practices, saddling people with fees, because that's the name of the game too. When you get into the rentals of individual homes, you can start charging these exorbitant fees because you're not really regulated like an apartment complex where you can't do that. And then, you can start to run up a bill on people who are just trying to get a $1,200 2-bedroom house to rent. And so there's, it's rent-seeking behavior writ large, but the problem is, like, does that mean we need to make it outright illegal to do? Or I struggle to find what the correct structure for this is.
Mm-hmm. Yep. And I think that's going to be a challenge for everybody involved. I mean, another area, though, even in the last 24 hours where Trump has maybe deviated from traditional conservatism. I mean, he went after the defense companies pretty hard yesterday. Just truth bomb after truth bomb. He says the defense companies are not investing in plants the way they should. Because of that, he doesn't want any executive making more than $5 million. Good luck with that. Doesn't want dividends or stock buybacks from these companies. Stocks got hammered. Singled out Raytheon as the least responsive, saying that they seem to think this is the Biden administration, while simultaneously saying, hey, we're going to spend a lot more money on our military. We're going to build the dream military.
Yeah, I think the stocks went down about 5 or 6%. Now this morning pre-market, they're up like 7 or 8%. Increasing the 2027 budget ask from $1 trillion to $1.5 trillion. I think it's incredibly interesting. I think actually he has more leverage in these negotiations than he does with the home side, because he can say, I mean,
we cut the checks.
Yeah, exactly.
You work for me.
We're not buying it.
Yep.
I mean, you can argue that almost every defense contractor is a quasi-governmental entity, at which point the government should dictate what the terms are of getting the goods they need.
Yeah, if you got one customer and it's Trump, you gotta keep them happy.
I mean, I do this on buying bonds, which is that, we manage between, I don't know, $500-600 million in bonds, and we need them every day. They mature constantly. If I can go to a bond dealer and say, hey, we will buy X million dollars in bonds, I will buy them from you if you only make X. So say the average bond trader makes a point per bond. I'll go to this guy and say, hey, we will buy these bonds from you, and you will make half what a normal bond trader would make, but I'll come back to you the next month and buy the same number of bonds every month, and you're going to make more money, and our clients are going to pay less for their bonds, and we can do that because we buy more bonds than anybody. And that's a leverage we have. It's not dissimilar to be like, I got to buy bullets from you, you make the bullets. We're the only people who are allowed to fire bullets. Let's come to an agreement here where you're not going to get rich off my clients, but we're going to get as many bullets as we need. And I mean, it's not pure market, free market ideas, but also the defense industry is not a free market because you can't just make bullets.
Well, and think of it this way. I mean, if we have a client who comes in and says, you know what, I'm not going to be a client anymore unless everyone at your firm works 15 hours or more every day. It's like, okay, well, take your
Ben's the only employee.
You can take your business elsewhere. But if they were our only client,
we'd be
working for 15 hours a day.
Yep.
Yeah. You can't sell tanks to Joe Schmo, and so you got to sell them to Donald Trump, and he gets to dictate the terms of that. That's just negotiations. I mean, and I think the thing to keep in mind here, and people forget it every single time it happens, is that Trump takes an extreme stance at the beginning of every negotiation, something that seems untenable, and people just fill their diapers. But the ultimate result is you end up somewhere in the middle where things are better for whatever thing he's trying to do. Take tariffs as an example. Everybody freaked out. The market went down 20%. And here we are making a lot more money than we were last year, and other countries are making a lot less, and that's good for us. And this is no different. I mean, he took an extreme stance. He put Steve Moran in there. He said we got to cut rates to zero first meeting. And then now we've got lower interest rates on the front end. What the effect of that is arguably negligible, I think. But, he's still in a position that's better than he was before, and he got something done. And so I think that everybody can freak out about this. They can be like, man, what a-hole. He's, messing with housing. He's messing with the defense contractors. But if we can pay 85 cents for a bullet we paid $1 for, that's less money taxed for you and me, because ultimately that's who pays for this stuff. So I'm for it. If the guy who runs Lockheed, who I notoriously am not a fan of, and I can explain to you off air why I think he is a terrible operator. But if he makes less money
Great.
and that money comes out of my pocket, I don't care. I really don't. So that's my argument there.
I like it. All right, we'll be back tomorrow. We might have a special guest with us, so make sure you're tuned in. No spoilers, but you'll just have to see what happens. Talk to you guys soon.